Hey everyone, welcome back to Corporate Decoder, where we make sense of the financial world, even when it tries its best to hide the good stuff. Today we're diving into Fortress Private Lending Fund's latest report, and let's just say they've been busy behind the scenes. Now, Fortress Private Lending Fund isn't your typical household name, but they operate in the world of private lending, which means they're essentially lending money to businesses or individuals outside of the traditional banking system. Think of them like a specialized lender, often dealing with deals that banks might shy away from. First off, Fortress Private Lending Fund is calling itself an emerging growth company. This is a label that allows them some flexibility, especially with financial reporting, a bit like a startup, getting a few extra years to get its books in perfect order. The main event in this report is about something called an unregistered sale of equity securities. Now, that sounds complicated, but it boils down to the company selling its own shares or ownership pieces to investors without having to go through the usual very public registration process with the government. They're using a special pathway designed for private deals. So what happened? In August of 2025, Fortress Private Lending Fund sold a bunch of its Class I common shares. And get this, the total amount raised was a whopping $762.25 million. That's a huge sum of money for a private offering, suggesting they found some very eager investors for their lending business. The number of shares was locked in on August 18th, but the actual sale seems to have kicked off around August 1st. To give you a sense of scale, they sold over 30 million shares. While the exact price per share isn't the focus here, the total amount raised tells us they significantly boosted their capital. They pulled this off using a specific part of the law, Section 4A F2, and something called Regulation D. This basically means they targeted investors who are considered accredited investors. Think of these as sophisticated investors, usually people or institutions with a certain level of income or net worth who are presumed to be able to understand and bear the risks of private investments without the same level of government protection as the general public. It's a way for companies to raise money quickly and privately without the extensive paperwork required for a public offering. Now let's talk about what this really means for Fortress Private Lending Fund. Raising $762.5 million in a private offering is a pretty big deal. It signals strong investor confidence in their business model. For a private lending fund, more capital means they can do more lending, they can invest in more deals, potentially larger deals, and expand their reach. This could mean they are looking to grow aggressively, perhaps by capturing market share from competitors or entering new lending areas. The fact that they went the private route instead of a public offering also tells us something. Private offerings are generally faster and less costly than going public. However, they also lack the liquidity that public markets offer for investors. So the investors buying into this are likely looking for growth potential and are willing to tie up their money for a longer period expecting a good return. Let's consider the implications from a Warren Buffett perspective. When a company raises a significant amount of money like this, the key questions are always what are they going to do with it? And are they likely to generate good returns on that capital? For a lending fund, it's about underwriting smart loans. If they can deploy this massive influx of cash into high quality loans that are repaid reliably, then this offering is a huge win. It means they are fueling their growth engine, but if they start making riskier loans just to deploy the capital or pay too much for the deals they acquire, then this large fundraising could actually become a burden, leading to potential losses down the line. The reliance on accredited investors also points to a target market. These are likely high net worth individuals, family offices, or institutional investors who understand the nuances of private credit. Fortress is betting that these sophisticated investors trust their ability to manage and grow their capital in this specific market. Looking at the broader industry, private credit has been growing significantly as traditional banks have faced tighter regulations. This has created opportunities for funds like Fortress. However, it also means increased competition, so raising this much capital could be a strategic move to solidify their position and enable them to compete more effectively for the best lending opportunities. In essence, this filing shows Fortress Private Lending Fund making a significant move to fuel its growth and capabilities by raising a substantial amount of capital through a private placement to sophisticated investors. It's a vote of confidence from their investors, but the real test will be how effectively they deploy these funds to generate strong returns. Now, if you found this breakdown useful and want more insights into how companies are really operating behind the official reports, make sure you hit that like button and subscribe to Corporate Decoder. And don't forget to join our Discord community linked in the description below for even more in-depth discussions.